Hello, friends. Welcome to Creating Wealth Part 5. In the next book, which we are going to summarize or review, is one of the favorite books of all times, and it's a favorite for investors. Even it is current, applicable to the present generation and for the future generations as well. Without any further delay, let's quickly jump into the book review. Okay, The Intelligent Investor by Benjamin Graham is a classic book on value investing. It's that is a he coined the word value investing. Okay, and that provides timeless principles for prudent and intelligent investing. Here's a summary of the key points. The first point says investing versus speculation. Wow, Graham distinguishes between investing, which involves thorough analysis and focus on long term fundamentals, and speculation, which relies on short term market trends and emotions. Wow. And second point, he says margin of safety. Graham introduces the concept of margin of safety, emphasizing the importance of buying stocks at a price significantly below their intrinsic value to protect against market fluctuations and uncertainties. Wow, a bit of stock market investment. Mr. Market analogy. Graham uses the analogy of Mr. Market of fictional manic depressive character representing the stock market. Investors should take advantage of Mr. Market irrational behavior by buying when prices are low and selling when they are high. Is is denoting the market situation sometimes as a manic depressive character. So in that particular point, we need to utilize the market for gaining or generating money. Okay, the fourth point is the defensive versus enterprising investor. Graham categorizes investors into defensive, conservative, and enterprising, aggressive types. Defensive investors are risk averse and prefer a more passive approach, while enterprising investors actively seek opportunities. Wow. The fifth point says the Graham number. Graham introduces a formula to calculate the intrinsic value of a stock known as the Graham number, which incorporates factors like earnings and book value to identify potential undervalued stock. So, to gauge a potential undervalued stock, he uses his own terms to gauge the value of that stock. Okay, and the sixth point is market fluctuations. Graham emphasizes that market fluctuations are normal part of investing and should not be cause for panic. Investors should remain focused on long-term value rather than short-term market movements. Very true. It applies to some of the other aspects of our life as well. We should focus our energies in long term perspective rather than carried away by short term fluctuations we face every now and day in life, in terms of relationships, in terms of businesses, in terms of anything that for that matter. Short term fluctuations should not move us into the emotional battle. Thank you, Graham. And the seventh point is the risk and rewards. Graham discusses the concept of risk and the relationship between the risk and the potential reward. Investors should assess the risk factors associated with an investment and balance them against the expected returns. Correct. Eighth, the defensive investors portfolio. Graham recommends a defensive investors portfolio consisting of a mix of high grade bonds and large stable stock. Diversification is a key strategy to mitigate risk. Yes, if properly diversed, the risk will be mitigated. And the ninth point says enterprising investors strategy. For enterprising investors, Graham suggests a more active approach, including selective stock picking and a willingness to engage in more thorough analysis and market timing. So he is satisfying both defensive investor as well as enterprising investor perspective. So he is not disappointing either of them, unlike other approaches which is taking one side, but he is supporting both the sides and with a solution. 10th point says investment philosophy. Graham advocates for a disciplined and rational investment philosophy that involves thorough analysis, a long term perspective, and understanding of one's own risk tolerance and financial goals. Wow. The intelligent investor has had a profound influence on the field of investing and has been a guiding light for many successful investors. It remains relevant today for its emphasis on fundamental analysis, value investing, and a prudent, disciplined approach to the stock market. Very true. So Graham, Intelligent Investor by Graham is um, majorly focused on stock investments. Stock investment are a concepts which even relevant for other investments as well. So here will it focus more much on stock investments, where how to analyze a stock and how to diversify your portfolio, and what are the types of situations in market, and fundamentally the takeaways would be like any other books. The common point here also says that look for the long term commitments and take calculated risk. And he says a value investing is very new, very interesting concept. Thank you very much, friends, and for today, this is Intelligent Investor by Benjamin Graham. Let's catch up with another book very shortly.